Like, share and subscribe. Is recession coming soon? What to invest during a recession? 1. Investing in defensive stocks. Defensive stocks are those companies that are relatively immune to economic downturns. These companies typically have stable earnings and are less sensitive to changes in the business cycle. There are several industries that are considered to be defensive, including consumer staples, healthcare, utilities and telecommunications. Consumer staples are the goods and services that people need regardless of the economic environment. Examples include food and beverage companies, household products, and personal care products. Healthcare is considered a defensive industry because people need healthcare services regardless of the economic environment. Companies in this industry include pharmaceuticals, medical equipment manufacturers, and healthcare providers. Utilities are considered defensive because people need electricity, gas, and water regardless of the economic environment. These companies often have stable earnings and offer high dividend yields. Telecommunications companies are considered defensive because people need to communicate regardless of the economic environment. These companies provide services such as phone and internet service. Finally, defensive stocks can be a good choice for investors looking for stability during a recession. However, it's important to note that not all defensive stocks are created equal, and some may perform better than others during a recession. Additionally, while defensive stocks may be less sensitive to changes in the economy, they can still be impacted by broader market trends and company-specific issues. 2. Investing in bonds. Bonds are debt instruments issued by companies or governments. They can offer a fixed rate of return and can be less volatile than stocks. During a recession, investors tend to flock to bonds as a safe haven, which can cause bond prices to rise. Bonds are a type of investment that involve lending money to a company or government entity in exchange for regular interest payments and the return of the principal at maturity. They are generally considered less risky than stocks because they are less volatile, meaning their prices tend to fluctuate less in response to market conditions. During a recession, investors tend to flock to bonds as a safe haven because they are seen as a more stable and reliable investment compared to stocks. This increased demand for bonds can cause bond prices to rise, which in turn lowers the yield or interest rate that investors can earn on new bonds issued. When investing in bonds, it's important to consider factors such as credit ratings, interest rates, and maturity dates. Bonds with longer maturities tend to offer higher yields but also come with a higher risk of interest rate risk, which is the risk that interest rates will rise and reduce the value of the bond. It's also important to diversify your bond investments across different types of bonds to manage risk. Overall, bonds can be a good choice for investors looking for stability and reliable income during a recession. However, like any investment, they come with their own set of risks and should be considered as part of a broader investment strategy. 3. Investing in gold. Gold is considered a safe haven asset during times of economic uncertainty. It is considered a safe haven asset, meaning that investors tend to flock to it during times of economic uncertainty, such as a recession. There are several reasons why gold is seen as a safe haven asset. Gold is a good hedge against inflation. When the value of a currency decreases, it can lead to inflation, which can erode the purchasing power of investments denominated in that currency. Gold provides currency stability and is not tied to the performance of any particular currency or country, so it can be a good hedge against currency fluctuations or devaluations. Gold has been used as a store of value for centuries because it is durable, scarce, and doesn't corrode. This makes it a good long-term investment that can hold its value over time. Gold is seen as a safe haven asset during times of geopolitical uncertainty, such as wars or political instability, because it is not tied to any particular country or government. There are several ways to invest in gold, including buying physical gold in the form of coins or bars, investing in gold ETFs, exchange-traded funds, or buying shares of gold mining companies. While gold can be a good investment during a recession, it's important to note that its value can also be volatile in the short term. Additionally, gold does not produce any income or dividends, so it may not be suitable for investors looking for regular income. 4. Investing in real estate. Real estate can be a good investment during a recession because property values tend to hold up better than stocks. However, it's important to note that not all real estate investments are created equal, and some areas may be hit harder than others during a recession. Real estate is a type of investment that involves purchasing and owning property, either for the purpose of generating rental income or for appreciation in value over time. Real estate can include residential properties, such as single-family homes, apartments, or condominiums, commercial properties, such as office buildings, retail spaces, or industrial warehouses, or even raw land. During a recession, real estate can be an attractive investment option for several reasons. Real estate can generate potential rental income, which can provide a reliable source of cash flow even during a recession. Rental income can help offset any declines in property values and provide a steady stream of income for investors. Real estate is a tangible asset that can provide a sense of security for investors. Unlike stocks or bonds, real estate can be seen and touched, which can provide a sense of stability during uncertain times. Real estate can serve as an inflation hedge, meaning that its value tends to rise with inflation. This can help investors protect their purchasing power over the long term. Real estate can potentially appreciate in value over time, especially in areas with growing populations or strong economic growth. This can provide capital gains for investors over the long term. However, real estate also comes with its own set of risks and challenges. During a recession, property values can decline, which can lead to lower rental income and make it more difficult to sell the property. Additionally, real estate investing requires a significant amount of capital and can be labor-intensive, requiring investors to manage the property and deal with tenants. Overall, real estate can be a good investment option during a recession for investors who are willing to take on the risks and challenges associated with owning property. 5. Holding cash can be a good strategy during a recession because it gives you the flexibility to take advantage of opportunities that may arise. For example, you may be able to buy stocks or real estate at a discounted price during a recession. Cash is the most liquid asset, meaning that it can be easily converted into other forms of value, such as goods or services. During a recession, cash can be an attractive investment option for several reasons. Cash is generally considered a safe investment because it is not subject to market volatility or fluctuations in asset prices. In times of economic uncertainty, holding cash can provide a sense of security for investors. Holding cash provides investors with flexibility to take advantage of investment opportunities as they arise. During a recession, prices of assets such as stocks or real estate may decline, creating buying opportunities for investors with cash on hand. Cash is the most liquid asset, meaning that it can be easily converted into other forms of value. During a recession, when credit and liquidity may be scarce, holding cash can provide investors with the ability to cover expenses or make purchases as needed. However, holding too much cash can also have drawbacks. Cash typically generates very little return, which means that investors may miss out on potential investment gains. Additionally, inflation can erode the purchasing power of cash over time, reducing its value. Overall, holding cash can be a good investment option during a recession for investors who value safety, flexibility, and liquidity. However, it's important to balance the benefits of holding cash with the potential drawbacks, and to consider your investment goals and time horizon when deciding how much cash to hold. Finally, let's do a quick summary on what to invest during a recession. During a recession, it's important to consider investment strategies that are defensive and geared towards long-term growth. 1. Investing in defensive stocks. These are stocks of established companies that have a history of weathering economic downturns. While they may not offer high short-term gains, they can provide long-term stability and consistent dividends. 2. Investing in bonds. Bonds are considered to be safer than stocks because they offer a fixed return on investment. They can be a good choice for investors who are looking for a steady stream of income. 3. Investing in real estate. Real estate can be a good investment during a recession as property prices may be lower due to decreased demand. This can provide an opportunity for long-term growth as the market eventually recovers. 4. Investing in gold. Gold is often considered a safe haven during a recession as it tends to hold its value well. Investors can purchase gold through exchange-traded funds, ETFs, or physical bullion. In conclusion, it's important to have a long-term perspective and remember that investing during a recession carries risk. You should avoid making impulsive decisions based on short-term market fluctuations. Always do your research and consult with a financial advisor before making any investment decisions. Thanks for watching. Like, share and subscribe.